President Trump's 30% tariffs onto South Africa signals or put 100,000 jobs at risk, specifically to the agriculture and the car industry. This is the comment that was, of course, made by our governor of the SA Reserve Bank, Mr. Kganyago. He said this apparently on a radio interview, and he highlighted that the agriculture sector and the automotive sector could be the sectors that are hit hard the most, which is something that is not good. Apparently, after the announcement of these tariffs, South Africa car exports to the United States slumped more than 80% in the wake of the import tariffs imposed on cars by Trump administration in April. And if there are no alternative measures, there could be 100,000 jobs that are lost. And this, like I said, was said by the governor, which is something that is not good. I mean, South Africa, you know that there is an issue of high unemployment, and these 100,000 job losses that could come could worsen the situation. And apparently the people that can be affected within these two sectors are mainly the semi-skilled workers, meaning that it's going to be those people that are not that skilled as yet, which are still on the road to becoming skilled laborers, right? This is not good at all, man. And seeing these comments made by the governor of our Reserve Bank, or of the SA Reserve Bank, it's not that good. You know that the SA Reserve Bank adjusts the monetary policy based on what they are seeing on the ground. And one of the things that has been making the SA Reserve Bank not to immediately cut the interest rates is tariffs that we've been seeing. And now that South Africa is faced with 30% of tariffs, things could obviously go back to where the SA Reserve Bank does not cut interest rates, because this in itself, it hurts our economy, meaning that the car companies or the agriculture companies or the companies that are usually shipping their products in the United States of America are going to not be able to export enough to the US, which that as a result is going to have an impact into their business, because now the revenues that those companies were making due to the fact of shipping their products into the US are going to now have to run at a loss, because their products won't be that much in demand. Because as I've discussed in the previous video, what happens is that if the price of your goods are too high, obviously people will not buy that. This is just a basic principle. I mean, if there's item A which is expensive, and there is another supply that is offering the same item at a 20-30% discount of, your chances are very high that you are going to go to buy the cheapest product, which is what already also make or put America at high risk of inflation, which is what the current Fed there in the US has been stressing to President Trump, to say that interest rates cannot be cut as yet, because these tariffs that we are imposing on other countries and other countries imposing tariffs on us, it's going to end up making or bringing a lot of demands into goods, into products, into services that the businesses in the United States are offering, and leading to high demand and low supply. And when that takes place, we all know that it makes the prices to shoot to the roof. And when prices shoot to the roof, inflation spikes. When inflation spikes, the Fed in the US, or the central bank in the US, will have to increase interest rate in order to cut down or to control inflation or high inflation, which is the main thing that the President of the United States with the Federal Chair, Mr. Powell, they've been fighting about, to say that not when it's like this, things could just go south. Yes, inflation is down, but things could just make a turnaround, which would lead into the US finding themselves sitting on high inflation, which would have to result into the Federal Reserve having to increase interest rates to try to cap inflation. So this is what also our SA Reserve Bank usually does. They monitor this to make sure that obviously things don't go out of hand. And now what's going to happen in our country is that since the supply of these agricultural products and the automotive products that we usually ship in the United States, since we cannot take them elsewhere, then it means that whatever companies are buying those products are going to buy it at a much cheaper rate, because now the supply is a lot but the demand won't meet the supply, which will simply mean that prices are going to go down, but that does not grow the economy, right? Because at the end of the day, it affects the revenues of the company, and until we find an alternative partner that we can ship whatever we've been shipping to the United States, our economy will not do that well. Our GDP will shrink, because right now we are not exporting, or we will not be exporting the kind of things that we're exporting to the United States of America. So this is what our SA governor said, and it's not good, man. I mean, one thing that I'm thinking about as I'm doing this video, it's obviously all these things of tariffs. When people, even myself sometimes, some people, when you talk about this, they don't realize the kind of impact that it has, not only to the companies that are actually shipping the products to the US, but to the employment or to the job opportunities that these exports into the US it's giving to, or it's bringing to our country, which is something that is not good, man. So yeah, man, I just thought I'd come and quickly give you this quick update. Tell me what you think about this. Like this video, subscribe, hit that notification bell if you enjoy the content. I'll keep them coming, and yeah, hopefully you continue enjoying this kind of content. I'll see you on the next one. That is all from me, and God bless you all.